Okay, so good afternoon, class. We will continue with our discussion for business combination, and we will begin with a recap of what was previously discussed in the other videos. So as of this point, at the very least, I would expect you to be able to remember the valuation of the assets and liabilities that will be acquired in an asset acquisition. As you should have learned in the previous videos, that business combinations can come in two forms. It's either going to be as an asset acquisition or a stock acquisition. We also mentioned before that there are various ways in which the consideration for the business combination may be paid. It may be paid in cash, in debt instruments, or some other assets, and equity instruments or shares. We've also discussed in the previous videos regarding reverse acquisition. Reverse happens Reverse acquisition happens when the acquirer issues shares, acquire the shares of the acquiree. As a result, the acquiree is the one who ends up obtaining control over the acquirer. So ultimately, it's actually the acquiree that is in reality the acquirer in the transaction. But as I've mentioned before, that rarely comes out in the problem. And the only reason we mentioned that last time was because one of the steps in accounting for business combination is to identify the acquirer. Again, as mentioned last time, following PFRS 3, we are to follow the acquisition method for accounting for business combinations. And the first step there is to identify the acquirer. And as I have told you, we normally will not have any problem identifying the acquirer. This is going to be the entity that pays for the combination, that will acquire control over the other entity. And so aside from the two forms of business combinations, it's also to know that the assets and liabilities that are in an asset acquisition are to be measured at fair value. Since in an asset acquisition, the acquirer acquires the assets and assumes the liabilities of the acquiree, then those assets and liabilities should be recognized or recorded in the books of the acquirer. And you would always be asked, at what amount will these assets be recorded in the books of the acquirer? And again, the answer is at fair value. Following PFRS 3 class, everything will be valued at fair value. The consideration that will be given by the acquirer also measured at fair value. The non-controlling interest, which we have not mentioned last time, but which will be a significant and important portion of our discussion later on, is also to be measured at fair value. But at this point, what is important, class, is for you to know that everything is to be measured at fair value when we are dealing with business combination. I've also mentioned last time that it's important for us to determine the acquisition date for two reasons. It would be the date in which we will be looking for the fair values that we will use. So the rule states measure the assets and liabilities, the consideration, and everything else at fair value. So the next question is fair value as of when? And the answer is fair value as of the date of acquisition. And another reason why the acquisition date class is important, aside from the fact that it represents the perfection of the acquisition date serves as the reckoning point of the adjustment period or the measurement period. Within this measurement period class, the valuations that we assign to the items involved in a business combination may be adjusted to correctly reflect their fair values as of the date of acquisition. I failed to mention this last time. You are given a period of 1 year to determine with finality the fair values that you will use. But within that period class, the fair value that we will be looking for is the fair value as of the acquisition date. So it would retroact. You are spending 1 year just for us to determine the fair value as of the date of acquisition. We do not use other fair values within the measurement period. We use the measurement period to determine the date of acquisition. The third step in the acquisition method class is the determination of your goodwill, which is explained before why it's possible that there is goodwill in a business combination. And I also reminded you before that following past 38, goodwill will only arise if there's a business combination. And to some extent, we considered goodwill as an exemption to the general description for intangible assets, because supposedly intangible assets are identifiable. But goodwill class is to be recognized as an intangible asset even though it is not identifiable. So, as an exemption, it is still considered as an intangible asset even if it is not identifiable. And I believe I have illustrated as to why it is identifiable. And it primarily arises because of the acquirer's belief that the value of the true value of the entity is greater than the sum of its parts. Even if you aggregate the fair value of its assets, the acquirer still believes when you pay for something more than what is the value assigned to those properties, normally it should be considered as a loss. You pay for 1 million, even though the value of the assets you acquired is only 100,000. That should be the normal, the logical conclusion there is that you suffer a loss. You pay 1 million, even though the value of the assets that you acquire is only under the assumption that the acquirer is not stupid or crazy, that he is not willing to pay 1 million when the value of the assets he is acquiring is only 800,000. And the only reason that the acquirer is willing to pay 1 that the acquirer is in the acquiring is what we will consider as our goodwill. Now, before there is the inverse that will happen, meaning the assets you are acquiring is greater than the amount that you paid for. So the value of the assets is 1 million and you're asked to pay 1,200,000. So in that case, the logic for the practical assessment of the transaction, which is there is a gain or a profit. Property is worth 100, you pay for 1,200,000. You had a savings or a gain in the amount of 300,000. Okay. So unless the consideration is equal to the fair value of the asset acquired, then a business combination will result in either a goodwill or negative goodwill or your gain on acquisition. And that is the most common question in business combinations. Okay, you will always be asked. That will always be the number one question, especially if we're still dealing with the rate of acquisition patterns. How much is the goodwill or the gain on acquisition arising from the business combination? Okay, and as I have illustrated earlier, the solution is not difficult, class. Okay, but for the sake of having a visual aid, class, I'll type in the formula just for a while. So this would be the most common question for this topic class. The problems would always result in goodwill or gain on acquisition from the business combination. And although it will get complicated a little bit later on class, but if we're talking about asset acquisition only, then the formula is very straightforward class. The consideration paid, value of the net identifiable assets. Okay, the term used class is the net identifiable assets because even though we call it asset acquisition, it's very common for you to be asked to assume the liabilities as well. Okay, so it's net assets because you acquire the assets and assume the liabilities. And it's, as another note, it's very important for you to remember that this should only involve assets that are, okay. And as I've mentioned earlier, an asset that is not identifiable class is your goodwill. So just in case the acquiring has existing goodwill on its own, it will not be included. It cannot be acquired by the acquirer in an asset acquisition. I'll devote another session entirely for pre-existing goodwill class. There are problems in which the scenario involves either the acquirer or acquiree prior to the present acquisition class, prior to the present business combination, already have existing goodwill in their books. So even before the acquirer acquires the acquiree, there is already goodwill in the books of the acquirer, or it's the other way around. Before the acquirer acquires the acquiree already books. And the explanation is that the acquiree had acquired another entity in the past. Okay? But let's not dwell on that as of the moment. We'll have another session devoted entirely on the on what to do when there is pre-existing goodwill. At this point, class, our very concern is on knowing how to compute for the goodwill or gain on the acquisition. And as I've mentioned, it should not be difficult because you only need two things. It's the consideration paid and the fair value of the net assets acquired. Or simply remember, class, consideration minus fair value. Consideration minus fair value. Will the problem give you the consideration for the transaction problem already? The answer is yes. In most problems, the amount of consideration will already be given in class. So the challenge on your part, if the question only is on the goodwill or the gain acquisition, is to solve for the fair value of the net identifiable assets of the acquiree. Okay? And will the problem also give you the individual assets class and liabilities? The answer is yes. So all that's left for you to do is to compute the aggregate amount or the net amount of the assets and liabilities of the acquiree at fair value. Again, what's the most common question for business combination? It is to solve for goodwill or gain on acquisition from the transaction. And what are the two things you need to solve for goodwill or gain? You only need to determine the consideration and the fair value. Will most problems give you directly the consideration? The answer is yes. Okay. Could the fair value of the net assets also be given in the problem directly? The answer is yes. But in most the fair value of the net assets acquired is not given, but the individual assets, the individual fair value of the assets and liabilities of the acquiree are given. So all that is left for you is to compute the net amount, get the aggregate amount of the assets less the liabilities. And you will already have your goodwill and gain. And again, class, if it is just an asset acquisition, the goodwill or gain on acquisition will be as simple as that. It would be as simple as deducting the fair value of the net assets from the consideration paid. Now, in the instances that the consideration paid is not given directly in the problem, what is the scenario? That will commonly happen if consideration class is in terms of shares or even in bonds. Because if the consideration is in terms of cash class, then the problem would not have any choice but to tell you how much cash is to be paid. And in that case, we will not have any problem. Okay, but if the consideration is in terms of bond instruments, debt instruments, and equity instruments, or in terms of shares, then you may have to put for the consideration first. But computation should not be very daunting on your part. For example, class, if the consideration is in terms of cash, what are you supposed to do? Just, sorry, not cash, in terms of shares. Following the measurement rule in PS3, you are to measure the shares issued to acquire the acquiree at fair problem give you the fair value of the shares class. The answer is yes. So if the problem tells you that the net assets of the acquired by issuing 200,000 shares, common shares of the acquirer, and the par value is 10 while the fair value of the common shares is 20, all you have to do is to multiply 200,000 shares issued times the fair value of 20. Okay? So, as a way of making the students confused, aside from the fair value, the par value would also be given. But again, class, the rule is very simple. Everything that needs measurement is to be measured at fair value. So, if you issue shares to acquire the acquiree, then the consideration is also to be measured at fair value. But again, this should not be a problem if the consideration is in terms of cash. Okay, but in case it's in terms of bonds and shares, just remember that it is to be measured at fair value. If the consideration class is in terms of bonds, then the problem will give you the quoted price, 102%, 100%, so on and so forth. Okay, and that concept should not be foreign to you because you should have discussed that in your financial accounting and reporting when you discussed bonds. But again, the rule class is very simple. Measure the consideration paid at fair value. But going back, what's the most important takeaway so far from our discussion class? If you are asked to compute for goodwill or gain, you only need two things. And what are these two things? You need the consideration and the fair value. Our formula is to simply deduct the fair value of the identifiable net assets from the consideration paid. Okay, we'll try to apply this later on. Okay, but as I've told you, there will be slight complication class when we are now going to deal with stock acquisition. But since our focus would first on asset acquisition, you can be confident in the fact that the computation of goodwill and gain would simply be consideration minus fair value. It's going to be as simple as that, class. If we're dealing with asset acquisition only, the computation of the goodwill or gain from the acquisition will simply be consideration minus fair value. And I also just like to remind you, as mentioned in the previous videos class, even it's very rare, it can happen that you will be asked from the perspective of the acquiree, how much is the gain or loss from the business combination on the part of the acquiree. But again, essentially the same concept. Get the assets in the books of the acquiree, compare it with the consideration. Okay, if the book value of the assets of the acquiree is at 2 million and consideration paid was 2,500,000, then in the part of the acquiree, there is a gain on 500,000. Because there's no goodwill when we are looking at the perspective of the acquiree. The goodwill arises only in the books of the acquirer. Okay, and as I mentioned before, the main focus in business combination problems would be on the acquirer because it's the acquirer that will survive, that will normally survive. Problems do not focus so much on the acquiree because the acquiree ends up getting dissolved and liquidated ultimately. Okay, but again, just even by using common sense, you should be able to get the gain or loss on the combination on the part of the acquiree. Okay, but because you're looking at the amount that will be reported in the book acquiree, you should be using the book values. Okay, but focusing back now to acquire class every fair value. Okay, I'll show you the problem I flashed earlier. I apologize. I thought I have already flashed the formula. Again, the formula is consideration paid less the fair value of the net assets. Okay, so the formula for the computation of goodwill or gain on acquisition should be very simple and straightforward. Okay? Going back to the problem class, it's very common for you to be intimidated by business combination problems. If problems are normally long and it would involve tables that are very big. Okay, that's very natural for students intimidated by long problems with uh, large tables. But the problem I am flashing right now, class, is a very common scenario or a very common problem that will be given for business combination. So our focus right now, class, would always be on the preparation of the financial statements on the part of the acquirer. And at this stage, we would still be focusing on the financial statements of the acquirer immediately after the combination. Okay, so if the combination happens on December 31, then the financial statements we are preparing would also be December 31. And this part of the discussion, class, is still simpler or is still simple compared to the other discussions in the future, class, because this is still immediately after the combination, meaning there are still no operations that are undertaken by the surviving entity. It gets complicated when we will be asked to prepare income statement. So as of the class, immediately after the combination, we will not be asked to prepare an income statement because there's nothing to report yet, because after the there are no yet uh, acquisition and acquisition. We'll have acquisition for talking about subsidiaries already, because in as we mentioned before, both and subsidiary, both the acquirer and acquiree continue to exist. So both of them will have their own independent operations and transactions. So they will have their own separate financial statements, income statement, and we would be tasked to prepare the consolidated financial statements. Unlike in an asset acquisition, one of the parties in the business combination gets dissolved and liquidated, so there's not much to do. We will only be focusing on the surviving entity. Okay, but again, let's leave those problems in the future class. Let's focus on asset acquisition. Let's focus on asset acquisition first. Okay, so aside from being asked to compute for the goodwill or gain on acquisition class, you would be asked how much is the combined or consolidated assets. Okay, the problem could simply ask you for the total assets, or it could ask you for the individual assets. So if the problem contains multiple questions, number one would be goodwill or gain, and again, it is simply consideration minus fair value. Next question could be compute for the combined cash, compute for the combined accounts receivable, compute for the combined inventory. And as I've mentioned before, supposedly, all you've got to do is to add the amounts reported in the acquirer and acquiree, because the acquirer is simply getting the assets and liabilities of the acquiree. But again, do not forget that when you combine the assets of the acquirer with the assets of the acquiree, the assets of the acquiree are to be added or included in the assets of the acquirer at fair value, because again, they are to be recognized at fair value. Okay, I will not focus so much on journal entries, class. At this point, you should be able to visualize entries already, class. Okay, uh, needless to say, in the acquisition of the assets, in the books of the acquirer, the assets of the acquiree should be debited, while the liabilities assumed by the liabilities of the acquiree assumed by the acquirer should be credited. And the consideration, if it's in cash, you should also have a credit to cash. If the consideration is in shares, but if the transaction is paid by issuing shares, then there should be corresponding credits to your share capital and share premium. Okay. Uh, Now, how to answer class combined amounts? Again, just okay, but focus first on company B class. As I've told you, the only valuation that is relevant for company B as far as company A, since company A is our acquirer, is the fair value. If possible, class, after seeing the problem in your text, cross already the amounts under the book vary. Because for the acquiree class, the book value will not be relevant if the fair values are already given. Okay, so you can mark this with an X class. Okay, you can crash it out because the only relevant valuation for the assets and liabilities of the acquiree, as far as the acquirer is concerned, is the fair value. Now, it's also possible that the problem would give you both book values and the fair value for the acquirer. This time, class, for the acquirer class, the only relevant valuation here is the book value. No revaluation will happen on the part of the acquirer. The only reason the fair value is given, class, is to confuse the students. Okay, is there a specific rule that the assets of the acquiree are to be recognized at book value? The answer is no. There's no need to record the assets of the acquirer class because it's already in the books of the acquirer. You are only retaining the assets of the acquirer. Okay, and since it's already in the books of the acquirer, all the other valuations aside from the book value would be irrelevant. Okay, the only additional assets and liabilities that would be recognized, class, are those that are acquired from the acquiree. Okay, so you may cash out the fair value for the acquirer and cash out the book values for the acquiree, class. Now, let's first answer, class. Compute for the combined accounts receivable. Okay. Of course, you're advised to always read the problem entire, beginning to answer the questions. The last sentence here, class, is that Company A paid 80,000 for various acquisition-related expenses, and the shares of Company A have a par value of 10 and a fair value of 25. At this point, the par value class, this would be relevant later. But definitely the first sentence in the last paragraph of the problem is relevant, in which it says that Company A incurred and paid 80,000 for various acquisition-related expenses. So another important theory, class, that should be part of your stock knowledge going forward. Acquisition-related costs, class, are to be recognized as an expense. Okay, since these items are paid by the acquirer, then these should be recorded in the books of the acquirer as an expense. And understand that since it has an expense, it will have an effect later on in your retained earnings because ultimately your expenses would be recognized as an expense. Okay, but again, let's focus now on the computation first of the combined individual assets class. Okay, let's skip for a while. Okay, so let's skip cash first. Okay, let's answer combined or consolidated accounts receivable. Okay, and this should not be very difficult, class. Okay, how much is the all you have to do is to combine the assets and liabilities of the acquirer and acquiree. How much accounts receivable does the acquirer have? Does Company A has accounts receivable in the amount of 400,000? Again, the relevant valuation here is your 400,000. Okay, the 350,000 is not relevant. But for the accounts receivable of the acquiree class, Company B, the relevant valuation here is the 100,000. Okay, so if you would be asked how much is the consolidated or combined accounts receivable reported by the acquirer immediately after the combination, our answer would be 500,000, 100 and 100. Next would be inventory. Okay, again, the same procedure, class. The asset of Company A plus asset of Company B. Just don't forget, for assets of the acquiree, it should be at fair value. And for the acquirer, ignore the fair value because no revaluation happens on the part of the acquirer. So, the inventory of Company A is 300,000, while the inventory of Company B, even though in its books it appears at 90,000, but the relevant valuation on the part of the acquirer is the 70,000. So in this case, the consolidated or combined inventory is 370,000. Okay, and then for your other current assets, okay, you just add them, class. The same procedure: add 600 and add 160. Okay, you should get 760,000. Now for cash, you should already have a there should be you should be wondering why we answered or we determined the combined cash last. Okay, because this is where students normally get it wrong, class. They get accustomed to the simple way of determining the combined amounts. They forgot to consider or take into account other instances that could affect your cash. Okay, so this is what students would normally do, class, in which they would get it wrong. They know that all you've got to do is to add the amounts from company A, the acquirer, and the amounts from company B, the acquiree, but at fair value. Okay. Supposedly, the relevant amounts are your 1 million and your 150,000. Okay. But the combined cash, class, will not be simply the sum of those two amounts. Please take note that the financial statements that will be given in the problem class would normally be the financial statements immediately before the combination. And what we are trying to prepare is the financial statements immediately after the combination. Now you have to take into account the transactions that happen in between, the immediately before and the immediately after. Okay? So please take note that in our problem class, uh, we actually have the answers here. Okay, but the scenario in the problem class is that if company A is 900,000 cash to acquire the net asset of company B, compute for the amounts to be reported immediately after the combination for the items required below. Okay, so for cash class, please remember that it is correct to add 1 million and 150, but there are other items for you to consider. And number one of which, class, is the consideration. So always be careful, class. If you're asked for combined cash, always inquire the consideration. Is the consideration in terms of cash? If the answer is yes, please do not forget to take that into account in cash. Okay? So what's really happening here, class, is that immediately before the combination, company A had cash in the amount of 1 million. Okay? But to affect the uh, to formalize the combination class, company A had to pay 900,000. And where will company A get the 900,000? The 900,000 is to be taken from the 1 million. Okay? So the 900,000 would be paid to the owners of company B to acquire the assets and liabilities of uh, the assets and liabilities of company B, who is our acquiree. Okay, so it's correct to add 1 million and 150, but please do not forget to deduct the consideration. And again, how much was the consideration? The consideration is 900,000. So you add 1 million, deduct the cash payment of 900,000. The cash that is really left for company A is 100,000. But since we are also acquiring the cash of company B, we would be left with 250,000. But as you can see here, class, our answer for the combined cash is not 250,000. What else should we not forget to consider for computing cash, class? Please do not forget to take into account the acquisition-related costs, okay, which is this one. This is very important. This is an important information from the problem. That company A also had to pay for acquisition-related expenses. Okay, so aside from paying 900,000 to the acquiree, it also had to pay 80,000 for professional fees and other costs related to the acquisition of company B. And these costs are paid in cash. Okay, so 1 million plus 150 minus the consideration of 900. Okay, and minus the acquisition related costs in the amount of 80,000, you should get 170,000. Okay, so if you're asked how much is the How much is the combined cash? Our answer should not be 1,150,000, should not only be 250, but it should be 170,000. Okay? Again, supposedly, if you're asked for the individual combined amounts, very simple. Combine the amount reported by the acquirer with the fair values of the assets and liabilities of the book value for the acquirer, fair value for the acquiree. Okay? Ignore book value for the acquiree, ignore fair value for the acquirer. Okay? But again, it's very important, class. Okay? That there are other transactions that will happen in between, one of which is the payment of the consideration. So if the consideration is in cash, class, if the consideration is in cash, it should affect your computation for the combined cash. But had the consideration been in shares, class, then it would not be the cash that would be affected, but instead the shareholders' equity of the acquirer, which would be problem letter B, okay, which would be a second set of questions. Okay, for now, our problem involves an acquisition wherein the consideration is in the amount of 900,000 cash. Okay, so how much is your combined hits? 170,000. Combined accounts receivable, 500,000. Combined inventory, 370,000. Combined other current assets, that would be 770,000. Let me write it down just. Cash would be 170,000. Accounts receivable. Um, Inventory, 370,000. Should have used Excel for this one. Other current assets. Uh, 760. Okay. But let's also compute for the combined amount for our non-current assets class. Again, it would only be 900 and 250, which would be 1,050,000. And then your other non-current assets in the amount of 800,000 and 280,000 for the non-current assets of the acquiree, which would give us 1 million. Let me use abbreviations. 1,080,000. Okay. And then, so that should be your answer, class, if you are asked for the combined amounts. Okay. But before proceeding to these questions, class, I forgot that we should have computed first the amount of goodwill or gain. Because as I mentioned before, this is the most common question. And again, what are the two things we need to solve for your goodwill or gain, class? You only need to compare your consideration and your fair value of the net assets of the acquirer. And the problem, class, as I've told you, is, and the consideration, as I've told you, is normally given directly in the problem. And in this case, it is 900,000. So going back to our formula, class, if consideration is 900,000, all we have to do next is to look for the fair value of the net identifiable assets. Okay, so we have here the assets and liabilities of company B. And again, the only relevant valuation here is the fair value. So this would be 150 plus 100 plus 70 plus other current assets of 160 plus PPE of 250 plus other non-current assets of 280. Let me give me time to add first class. 250, 320, 420, 480, 760, 960, 1,010,000. I hope I'm correct, class. The total assets is 1,010,000. Okay, but again, please don't forget nga we are not just going to compute the assets but also the uh, liabilities. But since it's a liability class, to get your net assets, you deduct the 180. So was it 1,010,000? 1,010,000 minus 180 would give you 830. Let me just double check na lang. 1,010,000 minus 180, so 830. The fair value of your net assets is 830,000. And this should give you 70 difference. Okay. And that is your goodwill. In case the amount that results from these forecasts is a negative amount, that would mean you have a negative or a gain on acquisition. Okay, so the consideration paid, which is already given the problem, is 900, while the fair value of the net assets is 830, computed by adding all the fair value of the assets deducted by the fair value of the liabilities of the acquirer. 900 minus 830 would give us a goodwill of 70,000. Okay, but very rare for problems to ask you individually, class, especially if it's a major exam already. uh, to ask you individually the combined amounts. So instead of asking you for the individual amounts, you would be asked for the combined total assets. Okay, you would be asked for the combined total assets. Okay, it's common that you would be asked for the cash after the combination. Okay, but because there are tricky items to consider for cash, but for other items, since you're just going to, for example, for your AR, for your accounts receivable, you just added 400 and 100. And for inventory, you just added 370. That's why problems, examinations will not be asking for those items. Instead, it would ask you for the combined total assets because it would already ask you to apply everything you know about the determination of the amounts after the combination. Now, supposedly, we've already computed all the amounts, class. Okay, how much is the combined cash? 170. How much is the accounts receivable? 500. How much is the combined inventory? 370. 760, 150, and 1,080,000. Okay, and supposedly we are of the opinion this should be to the combined total assets. Okay, and such way of thinking is sound, but there's one problem, class. Okay, but let's add this one first. Uh, 40, 20. So the total would be 4,030,000. Okay, but that would not be your answer in case you're asked how much is your combined total assets after the combination. Okay, your answer as shown here should be 4,100,000. So what then is the error in our computation? You forgot to include, class, the goodwill that arose from the combination. How much was the goodwill, class? We had goodwill of the amount of 70,000. So your combined assets, class, should be 4,100,000. And many students would forget this one because they are not able to see the account title goodwill in the table given in the problem. but you're expected to be able to remember, class, that if the combination results in a goodwill, that should form part of the assets of the acquirer or the surviving entity. Okay? So if the question lang, class, is to compute for the combined total assets, there are no tricks for all your other assets except for cash. Please do not forget to take into account uh, please don't forget to take into account your the consideration paid, and the payment for acquisition related costs. Okay, and that affects only your cash. Other source of errors in the computation of your combined total assets is the exclusion of your goodwill. Include the goodwill even though they have already correctly computed that the transaction resulted in a goodwill of 70,000. So they would forget that there's a goodwill of 70,000, and even know that goodwill is an asset, but they would forget to include that in their computation of the combined total assets. So for all the other assets, class, nothing tricky, just add the assets of the acquirer at book value and the acquiree at fair value. There are only two things to be mindful of, class: the combined cash. For your combined cash, please do not forget to deduct consideration payments and payments for acquisition related costs. And as a last note, do not forget to include any resulting goodwill. But if the transaction did not result in goodwill, then that works in your favor. Even if you'll be able to forget, but because there is no goodwill, there's nothing. But most problems will result in goodwill. That's why it should affect computation of your combined total assets. So again, just to emphasize, you already correctly computed 170,000 for cash, 500,000 for AR, 370 for inventory, other current assets at 760, PPE for 1,150,000, other non-current assets at 1,080,000. Ordinarily, that should be correct in arriving at your combined total assets. But since the listing of your assets in your computation relied only in the table given in the problem, which were the financial statements immediately before the combination, you normally would forget to include your goodwill. This would be the third thing that's very important for you to remember or take away from this discussion, class. Number one was the evaluation at fair value. Number two was the treatment for your acquisition related cost. This would be number three. Do not forget to include your goodwill in the computation of your combined total assets. Let's just have number four also, class. The two things to remember for your cash, which are the consideration, the payment for the transaction, the consideration paid, and acquisition related costs. Related costs are to be recognized as an expense, and they are normally paid already. They should be considered in computing for your combined cash. Now, you will also be asked for combined liabilities, class. It will only be 600 and 180. The computation of your combined liabilities would only get tricky, class, if the consideration was in terms of debentures or bonds. Okay. Now, final note, class, for this problem. For shareholders' equity, class, for shareholders' equity, you do not add the shareholders' equity of the acquirer and the acquiree. Immediately after the combination, the only relevant shareholders' equity is the shareholders' equity of the acquirer, class. You ignore already the shareholders' equity of the shareholders' equity of the acquiree. There will be now double recognition, class, if you are going to add the equity when you have already added the net assets, the liabilities. So the acquirer recognizes only the assets and liabilities. Of course, we have nothing to do with the shareholders' equity of the acquiree. So if you are asked for the shareholders' equity of the combined entity, class, or the surviving entity immediately after the combination, it would simply be the shareholders' equity of the acquirer. Since our consideration in this problem is in terms of cash, class, there will be very little to discuss for shareholders' equity immediately after the combination. There will be more issue on your shareholders' equity, class, had the consideration been in terms of the scenario letter B, which we will discuss in another video. But there's just one thing you have to remember, class. Remember the acquisition-related cost. What was the treatment for the acquisition-related cost, class? They are to be reported as an expense. And what happens ultimately to your expense, class? They will be close to your retained earnings. So if you will be asked how much is your retained earnings in the combined financial statements immediately after the combination, it will not be 2,500,000 because this was before the payment of the acquisition related cost. After the acquisition related cost of 80,000, your since it's reported as an expense, your retained earnings will now be 2,420,000. How did we get 2,420,000? We start with 2,500,000 because supposedly that's the amount that we are to report. If you're asked for the retained earnings immediately after the combination, it should be the retained earnings of the acquirer lang. But why is our answer not 2,500,000? Because the 2,500,000 does not take into account yet the expense that happened during the combination. Okay, so 2,500,000 less the acquisition cost of 80,000, which is to be reported as an expense. That's why the amount that will be reported in the financial statements immediately after the combination would be the 2,420,000. Okay, 2,500,000 minus 80. If you look at class for your share capital, it is simply 600 and 300. The same amounts reported by the acquirer immediately combination. Okay, so to summarize class, first, if you're asked for goodwill, it's simply consideration minus fair value. Okay, if you're asked for combined individual assets, just add the asset of the acquirer at book value and the asset of the acquiree at fair value. Okay, but be careful if the question asks for cash. Okay, because aside from adding the balances from the books of the acquirer and the fair value, which is also the face amount already, which is the same as the book value class for cash. Aside from adding the balances reported by the acquirer and acquiree, you have to remember to deduct the payments made by the acquirer in relation to the acquisition. So please do not forget to deduct the consideration. If there are acquisition related costs paid by the acquirer, please do not forget to deduct the acquisition related costs. Next, if the question is for combined total assets, of course, one way of solving it is to simply add the combined amounts for the individual assets that are in the books of the acquirer after the combination. But what do I want you to remember, class? What do I want you not to forget when solving for combined total assets? Please do not forget to include the resulting goodwill. Is it common for students to forget including the goodwill? Yes, because when they get the combined amounts, they rely on the table given in the problem. And the problem will not have any line item for goodwill. Okay, so many students would forget to include goodwill, but be careful if the acquisition results in goodwill. Of course, goodwill is an asset, so that should form part of the combined total assets. On the final note na what if the transaction did not result in goodwill, but instead it resulted in a gain on acquisition? Since it's a gain class, it would be closed later on to your retained earnings. So just like the acquisition related cost, which was deducted, if you have a gain on acquisition, it would also be closed to your retained earnings account. So even though shareholders' equity accounts will follow only the shareholders' equity amounts reported by the acquirer, there can be changes to the retained earnings account. What are the possible changes to the retained earnings account in preparing the combined financial statements? Number one, acquisition related cost deduct. Number two, you add the gain acquisition, if any. Okay? Careful on the result of acquisition. Goodwill, do not forget to add the goodwill as part of your total assets. Did the combination result in a gain? Then do not forget to close the gain to the retained earnings. The class involves gain on acquisition, so we will be able to illustrate that later on when we discuss problem letter B. But as of now, we will end here. Hopefully, you are able to have a clear understanding now on how to arrive at the amounts that will be reported in the combined financial statements immediately after the combination. Okay. I'll prepare a discussion board in our Canvas account. If you have questions from what we have just discussed, please post your questions there so that